Hello and welcome to another edition of BCR Webcasting. Today I'm joined by John Beaney, who's Global Head Receivables Finance Product Management at HSBC. And John will be taking part in our Receivables Finance International Convention next month, which will be on the 22nd and 23rd of May in London at the offices of Clifford Chance. And the particular panel that John is contributing to is on global opportunities and democratizing receivables finance for mid-cap companies and SMEs. John, welcome.
Thank you, Michael. Appreciate it.
John, I'm interested in your views on the receivables finance landscape beyond the more mature markets of, let's say, Europe and the US. And interested to get your views on who you think are the emerging stars, shall we say, in the new markets around the globe.
Really interesting question, Michael. So, look, I think the outlook for the industry in both the short and the medium time is very positive. I can't think of a single country where receivables finance is not relevant. But a short answer to your question is, of course, India. Because of the demographics of the country, because of the economic transformation, and of course the level of e-commerce take-up. Now, across Asia, the wider Americas, the Middle East, there are many common needs for access to working capital and for credit risk mitigation. Now, these needs in different formulations are found in both SMEs and the largest corporates. Being able to solve for these requirements for domestic trade is a real opportunity, and doubly so for cross-border trade, with businesses operating in multiple countries. And then these are the challenges that HSBC wishes to solve for, and that's indeed why receivables finance is so important to us. Now, I'm not an expert on Africa, but I do believe that the early movers and our industry association, FCI, are absolutely right to give it focus. I'd also highlight the growth in intra-Asian trade and how that presents an opportunity for the industry. But there are also challenges thrown up by the evolution in supply chains, including nearshoring and just in case. Now, if any of your listeners want to learn more about supply chain evolution, do see the insight from the HSBC's Global Investment Summit. It was recently held in Hong Kong, and the materials available on the website. Now, in addition, we've just conducted a review of the growth prospects for receivables finance looking forward to 2030. The research was undertaken jointly with a leading consultancy, and that forecasts growth across the regions of between 5 and 25% compound. Now, the 25% growth is for countries starting from a low base, but there's clearly widespread need and thus opportunity. I think it's a very exciting time to work in this industry. But as a conclusion, I would highlight that the industry association work to remove regulatory barriers is really important, and it can have a big impact in enabling the industry to support SMEs to our full potential across these regions. That answered your question.
Yeah, and I think we've seen quite a bit of work that's been done in that area in the last few years. What about what do you think developing markets can learn from more mature markets? They've been in this space for decades now, and obviously they've developed their products and services and refined them. That's going to be an advantage, isn't it, to the emerging markets in terms of learning from that, and also, you know, what do developing markets, what are they particularly good at? What do they excel at the moment?
Yeah. Well, and two really good questions. Let me just first that there are several valuable lessons from developed markets, clearly, but the most important which is deliver for customers. That's, you know, absolutely fundamental. Now, if you look at continental Europe, we see the take-up of receivables finance has never been higher. Now, the EUF expresses the take-up as a percentage of GDP, and clearly levels in excess of 10% of GDP point to very widespread relevance of RF and to customer satisfaction. But it also suggests yet more scope for growth. Now, we're all financial institutions, and thus we must manage credit risks effectively. Now, I believe the industry generally does that, and when mistakes are made, then lessons are learned. Now, for my own business, earning the confidence of the bank's risk officers is one of the most powerful drivers of success. Now, such confidence is very hard won. It can be easily lost, so you have to be constantly vigilant, you have to have real expertise, and we need to make ever more systems investment. Now, to get to the heart of your question, the tricky issue, and any parent knows this, is whether people can learn from the mistakes of others or whether they have to make their own mistakes. Now, it's clearly much cheaper to learn from others. And that's why these industry conferences, the education programs, they're all so valuable, because they provide a forum to share experience and learn from others. I think it's also really good that you ask about areas that developing markets excel in. Now, the obvious one is digitalization. I was recently in Kenya. I was very impressed with the digital tools available from the state, something that's called e-citizen, and also from private enterprise. Now, I'll give you one example, which is called M-Pesa. It's a universal method of payments, and it's built upon the mobile phone. So from the smallest roadside enterprise to the biggest firm, it's the most common method of payment, in my experience there. Cash is actively discouraged because it's so convenient. Now, what is transformational is the scope to make good decisions on the huge level of payment data that's now available. Now, I can see embedded lending products within the application, and the scope to do more of that can only grow. Now, any receivables finance business would build upon this data and not be wrestling with transforming from processes that still include manual checking processes. So, very fine example.
Yes, I guess a lot of these emerging markets have a significant advantage over the mature markets in terms of being able to develop new technology or take advantage of new technology, because they're not trapped as some mature markets are struggling with legacy systems and
exactly
and transferring from that.
Yeah,
what about
they've made a leap?
Yeah. What about investment in emerging markets? What sort of what's the investor appetite like, and how do they manage risk tolerance and how these emerging market risks addressed, you think?
Yeah, well, Michael, I can only answer for HSBC, but I would say that there is appetite to invest, and investing in receivables finance in emerging markets, because the risks can be mitigated. Now, we're present in 38 countries and territories. The advantage of RF is it does have such strong risk mitigants. Now, we do face challenges in developed markets compared with the many markets where RF is highly developed. There is real operational risk. Initially, we may not have local economies of scale, and there may be gaps in local experience levels. Now, we mitigate that through having global standards in systems, in policies, and in education. Plus, we put support in regional centres. Also, individuals do step up and they take roles when we're developing a new market. It's one of the advantages of working for HSBC. Now, for example, in my immediate team, everyone has worked in at least one other country. Now, another issue is access to buyer credit information. Now, we can mitigate that through our group network, partnership with leading trade credit insurers and credit information suppliers, but it does affect appetite, especially for SME buyers. But if we look back in the UK, we have had issues in all of the markets in the past, and access to information does progressively improve as the information suppliers partner with us. Now, there are also regulatory barriers in some markets, and these are slowly but progressively coming down through the work of the local and the global industry associations. Just last week, the local regulator in one very rapidly developing Asian country met the Banking Association to better understand the customer requirements and consider specific proposals that will enable access to limited recourse receivables finance. Great progress. Receivables finance can also specifically support exporters, and thus a significant part of the risk will typically include exposure to risks in developing markets. Now, given HSBC's international orientation, many of our clients are indeed exporters.
Yeah, and I guess in these emerging markets, the pace of development and overcoming these hurdles is different in different markets, but they all seem to be moving in the right direction.
Right.
And
you're right about learning from others. That can be so helpful.
Yeah, yeah, of course, and a significant advantage which the mature markets didn't have decades ago when this was. Receivables finance.
Albeit if we know our history, all my team in the UK, we benefited from all that knowledge transfer from America. So it's happened over the ages.
John, thank you very much for your time today, and we'll look forward to seeing you at Receivables Finance International. And just to remind everybody, that's on the 22nd and 23rd of May in London at Clifford Chance. John, thanks once again.
Well, thank you, Michael. I've really enjoyed talking to you as always. And I do look forward to seeing the delegates and the exhibitors in just over a month's time. Fantastic.
Thank you very much.